Hey guys, what is up? It is Eric here, and welcome back to the fourth and final episode of this day trading challenge. As you may have noticed, it's been a long time since my last upload, and for that I apologize, but since my last video, I've taken hundreds of trades, and I far exceeded the $6,000 target. I wish I had uploaded a couple more times over the past couple of weeks, but I can't change the past, so the best I can do is to show you some of the trades that I took that helped me reach that $6,000 goal. Alright guys, so the first stock we're going to be taking a look at is MITT. And before we start looking at how I was thinking during this trade, let's first take a look at how the stock had actually been moving. So we can see that it had a breakout above the $5.50 level where it climbed all the way to $6, where it tested that hold all resistance, it failed, and is now forming a red candle. And if you have seen any of my previous videos, you'll know that I like to sell immediately when a breakout is showing signs of weakness, because it will very often fall back to the 9 exponential moving average, which is represented by this black line on the graph. And you can also notice that the stock is easy to borrow. So my trade idea was that this stock was going to be returning to the 9 EMA and would present an opportunity to short. Next, we have to decide how we wanted to execute this trade. So I'm currently holding my mouse in the actual video at the bottom of this green candle, which would represent the first candle to make a new low, which is opposed to the first candle to make a new high that you may hear if you trade breakout strategies. So that was where I was looking to potentially enter the trade, which is at $5.86. Then we have to decide our profit target, which would be the 9 EMA, which is currently sitting at $5.71. And then our stop loss would be just above $6 because we know that that is a level of resistance, right? So we have our target, our price target, our profit target at a level of support, and our stop loss at a level of resistance. And we just do this because it's a really safe plan where we're able to stay in the trade while there is still potential for it to go according to our trade idea. And in this trade in particular, we'd be risking about 15 cents to make 15 cents. So it's a 1-to-1 profit to loss ratio. But the reason why we still take this trade, because you'll hear very often that you want to have higher profit to loss ratios, is because this trade in of itself has a pretty high chance of actually having profit. And I can say that confidently because if you go and look at other stocks that have breakouts, it is a very common pattern that it will return to the 9 EMA. So that is why I felt confident in taking this trade. I'm going to play the video and we'll see if I executed the trade according to the plan. So right there, it actually touches the entry point, but I didn't do it. And the reason why I was hesitant is because it had already had the trailing bottom before. So it looks like I'm actually trying to hold off a little bit when this trade occurred on June 8th. And you can see that right around this level at 5.8 is where I actually decided to enter the short, because that's where I felt that there was confirmation that this trade was going according to my idea. And then right as we touch the 9 EMA, I buy back and cover my short, and I secure a nice $50 profit. So the next stock we're going to be taking a look at is GNUS, and just like we did with MITT, we're going to look at the stock and see if we can find a trade idea. So the first thing that I'm noticing is that there is a bull flag forming. You can see that there's a big green engulfing candle, which would form the pull, followed by some sideways trading, which would be the flag. The next thing I'm noticing is that it's actually about to test the $3.50 level, which would be a $0.5 resistance, in combination with these 4 candles right here that also tested $3.50 and failed. So my general idea for this trade is that there will be a breakout happening above $3.50. So next we would want to determine how we want to execute this trade. So our entry point would be at $3.50 or just above $3.50. And then we would want to set our stop loss at the 9 EMA. And this is because it's a relatively tight stop loss. And if the stock went below the 9 EMA, then the trade idea would be kind of voided, because there's not a high likelihood that there will be a breakout above $3.50 if it falls below the 9 EMA. However, if it kept trading and following the 9 EMA, I would still believe that there is potential for it to break out above $3.50. Next, we would have to determine our profit target. And my trading idea or philosophy has sort of evolved over the last couple of weeks. But in this instance, I think I ended up selling at the first sign of weakness. Whereas if I were trading this now, I would be looking to sell half of my shares at 360. And I guess it's sort of arbitrary, but it's towards the top of this previous candle. So I would look to sell half of my shares there. And then I would sell another half at 370, which was the high of day. In the remainder shares that I would be holding is in case it breaks above the previous high of day. So we're going to play this trade out, see what I did, and if I believe there was anything I could have done differently. So right there I bought in, and the reason why I did that is if you look at the bid and the ask, you can see that there was over 200 on the bid and only 40 on the ask. And a lot of times when this happens, the actual price of the stock will explode over the level, and I didn't want to be late. So I decided to get in at 350. I knew it was going to go above 350 just because of the discrepancy between the bid and ask. So here we touched $3.60, and you can see that I didn't sell half of my shares. And I think the reason why is I just wanted to maximize my profit on this trade. And when I started seeing the weakness here is where I decided to sell half of my shares. And the reason I kept the other half is I still felt that there was potential for this trade to go higher. But in hindsight, it was really just a mistake because, I've always mentioned this, but whenever you see weakness on a breakout, it will very often return to the 90 MA. And it is actually what is happening right now. It's still showing weakness. You see it on the level 2, and I'm holding my shares instead of selling. This was just extreme greed, and I would not recommend it. When you're playing a breakout and you're seeing weakness, I always think you should sell out of your position. And I do decide to sell out there, and I don't know why I chose that level. I think it was just around the level I bought in with a little bit of profit. And right here, I'm going to pause this video. I think right here is actually a very, very good opportunity to buy back in for a pullback trade. So if you're not familiar, there is a trade called the 1 minute pullback, and whenever there is a very, very large red candle, a red engulfing candle after a breakout, it will very often retrace back up sometimes like 30 to 50% of this move. And the reason why this trade in particular is looking good to me is because it just kind of came off of the 90 MA, and it's already looking a bit bullish from right here, and I wouldn't buy in at any time. So I think the criteria for you to take this trade is you would have to be watching the level 2, and you'd want to buy in whenever there's a lot of buying volume. So when you see a lot of green is when you would want to try to buy in. But anyways, we'll just watch this and see if I took this trade and how the trade would have played out if I had done it. So I did not take that trade, and the reason why I didn't take this trade is 2 weeks ago I wasn't trading pullbacks. I was really focused on honing in my breakout strategy. But as you can see, this would have already been 8 cents profit so far, and I probably would have sold here mainly just because it just matched this candle here. And it's again kind of arbitrary, but it's just kind of how I've been doing things, and I would have got out of that trade with 8 cents profit. What I was looking for in this trade though is to buy in at the top of this candle right here at 3.6, because I really did believe that this was going to keep running up to 3.7 and potentially create a new high of the day. You can see I'm looking at the 3.6 level 2, deciding if I wanted to buy in at the open of that candle or if I wanted to buy in at the tail of the candle. I wasn't sure in that moment, but I do think, looking at this now, buying in at the open of this red candle is definitely the way to go, and at that 3.6 level. So this trading is actually looking very, very positive here too. You can see that on the current candle, it actually came down and touched the 90 MA again and closed higher than it opened, which is a very, very bullish sign. And right there at 361, I decided to buy in because it broke the 360 level that I was looking at, and it's already breaking up. So again, I would sell half of my shares at 370 because I like to secure profit. I don't know what I did here, but I suspect I probably didn't based off of my first trade and the fact that I waited for weakness. Will I sell half my shares? It looks like I didn't sell half of my shares, and I kind of missed the opportunity to sell at 3.7, and I'm currently holding my entire position size as it's coming back down. My stop loss in this trade would still be the 9 EMA, and my profit target in this trade would be, again, I mentioned I would sell half of my shares at 3.7, and it seems I have a line drawn at 3.8, so maybe that was the high of the pre-market, and the 3.7 was only the high of like the day throughout open. For this trade though, we would still be risking about 5 cents to make, you know, 10 or more. So this is a very, very good trade from that perspective. So we're at 3.7, and it looks like I did decide to sell half of my shares this time. So maybe I learned my lesson, and I'm still holding half of my shares to try to maximize profit, as I should. And it looks like I'm trying to sell another half again, which is how I think I really should do things. I think this is the correct way. You should be looking to sell another half of your shares at 3.8 and then hold 500 to see if it will create a new high of day. But I see weakness, and I decided to sell completely out of the position, and it looks like I secured $135 profit, and I was very happy with that too, considering the size of the account. So the next trade we're going to be taking a look at is the trade I made on WAFU, and there's two reasons why I actually bought in where I did. So the first is I realized that it was about to halt, and oftentimes after a halt is resumed, it will continue in the direction that it was halted. And then the second reason why I bought in here is if you look at the 5-minute chart, we can see two lines. One is the high since open, and the other is the pre-market high. So the halt actually occurred just above the high since open, and these two factors in combination made me believe that there could be a potential break up to the pre-market high, which would be a lot of room for profit. But because this is a risky trade, I decided to only go in with 100 shares. So we're going to resume and see how I traded this. So right out of the halt, you can see that it sort of pulled back to the 9 EMA, and I think I should have been looking to add if it went back above where we halted. And it does seem that it has a lot of momentum on the upside right now. So I think that I would be definitely interested in adding, like right there would have been a great opportunity at $13. But I didn't take it, which is okay, because it's okay to be a little bit cautious when you're trading something that has a potential to lose a lot of money. And you can see I'm about to try to sell some shares. I put in an order to sell at 73, but it comes back down, and I'm just looking to get out, which I do right here. And you saw that I did a join the ask, and that's because I saw, if you look at the ask right now, $13.97, and I would have been pretty happy to get out at around $14 since that's a whole dollar resistance, and it seemed to be very volatile, and I wasn't sure if I wanted to keep risking money in this trade. But in the end, you know, we secured $134 profit, a very, very easy trade, and the only thing I think I would have done differently is added some shares at $13. Alright guys, so the final trade we're going to be taking a look at is my trade on U1. And if you guys have been trading over the last couple of weeks, then you know U1, because U1 was a multi-day runner and it was absolutely insane. So in this trade in particular, I was looking to buy if it kind of pulls back a little bit, then comes back up to 1150 and it breaks through that, because I figured it's already been so strong throughout the day. It's gone from, you know, $7 to $11 in just about 10 minutes. So it's already looking very strong, and if it pulls back a little bit, that would be a great opportunity to get back in, or get in, since I hadn't been able to get in before. So anyways, we'll play out the video and let's see how I traded this. So it does get that pullback like we had wanted, and we start seeing some buyers on the level 2, and it's approaching that 1150 mark where we would be looking to buy in. And right there, I saw 1147 on the bid, 1154 on the ask, and I decided to buy with 500 shares at 1148. and I was hovering over the sell because there was always the potential that this could crash down very quickly. But you know, right there we can see on the bid that we're at 1190 with $12 on the ask, so we were already up $250, which is 50 cents a share. So right here, what we were currently planning is if we failed to break through $12, then we would be looking to sell, because you know, if it gets rejected at that resistance, then it's very likely to get crashed down to the 90 MA, since it's so extended on both the 1 minute and the 5-minute charts. So that is currently what we were looking for, is just being very watchful on the level 2, but we do see that there's a larger bid size than the ask size, so I did suspect that it was going to break through $12. And here I was very confused. Look at the bid, it's $12.57 and the ask is $11.97. So the bid was higher than the ask, and I had no idea what we were currently trading at, and I was just hoping that the ask is what was lagging and that the bid was correct, because if the bid was correct, then we were going to be up a lot of money. So I decided to speed up the video a little bit, and the bid and ask has been corrected. We're currently trading above $12, which is what we wanted anyways. And right here, we actually immediately break through $13. So, you know, it's just slicing through these resistances, and we're up $880. So this is already a super insane trade. I might be looking to make $2 a share, which is ridiculous. And there's like you can see the bid size is just enormous compared to the ask size, and we're right there. I sell, and we're up $980 on this trade, so just shy of $2 a share. Incredible trade. And you know, this like sell right here was just strictly taking profits. We were so far extended. You know, you can see that the 9 EMA on the 1 minute chart is at 1089, and we're trading at 1324. That is a huge gap. And you know, if we're gonna crash back down to the 9 EMA at some point, I don't want to be in the trade, because I'm already up almost $1,000 in what was a $5,500 account. Very good trade, and I am super happy that I was able to have my eyes on this as it was happening. And with that, this is the end of the video and the series. As for the direction of my channel, I will continue to upload trades that I take, and I'm also considering in-depth videos covering my trading strategy and philosophy. If you did enjoy this video, consider hitting the like and subscribe button, and have an awesome day.